Welcome back, everybody, to Markonomics 101 presents Hoot Loot, the place to be informed, be amused, but never be misled. Today's show is called Risk of Economic Collapse Hits an All-Time High, December 18th, 2021. Three themes we've talked about this year. Inflation rising, it's happened. Interest rate rising, it hasn't quite happened the way we forecast. And stocks at a growing level of risk as their overvaluation becomes incredibly severe and speculation is running rampant. So we're going to have that today as our show. We're going to talk all about it. The reason I'm up here on Mount Everest is because I'm cold, number one. And number two, when you're at the top of the mountain, there's only one place to go, and that's down. And we're at the top of the mountain right now, so be careful. The drop is going to be really severe and sharp. Please like and subscribe. We'll be back with the charts in just a minute. Welcome back, everybody. Now we're going to look at the charts. This first one is brought to us by Bank of America, and this is a long-term history of real interest rates. Real interest rates being defined as interest rates minus inflation, a 10-year rate. Right now, it's running at -5, and that puts it at a horrible, horrible situation. I would really look at the data post-World War II here, and you can see post-World War II, it is as bad as it got in 1973, which presaged about another 8 years of economic horror. So we're looking at a really bad omen here, and the only thing I can say is be prepared for this, because this is going to get really ugly and out of hand, is what we believe. Now, so right here, another chart from Bank of America. These are all the different economic and financial collapses and crises. And what you can see here, and what they kind of say here, suggests is that we're due. Is that these occur every so often, every few years or something like that. And we're not only due for one, we're at a horrible place. We're at the top of the mountain. We have no place to go but down. So, it's just be aware. Now, these are the reasons. I start out with Bitcoin, even though I call it just a password. That's really all it is. But it's a really good measure of market sentiment, and especially speculative sentiment. So it's kind of a canary in the coal mine. Bitcoin, I've been talking about this thing. Crypto's collapsing. I still think that's probably going to happen here in the not too distant future. They're starting to look pretty weak as a sector. And the other one that is a canary in the coal mine is Tesla. Tesla also is correlated incredibly highly to Bitcoin, a lot of these other companies, or a lot of these other cryptos, and basically it's a measure of risk. Elon Musk, I normally give him quite a hard time about going to Mars and the moon and all that stuff, but I got to applaud him this week. He gave Bernie Sanders and Senator Warren about all they could handle, talking about government mismanagement of finances and all that, and Elon Musk is proven expert at having government support him, and then while he criticizes them. So it's turned into a three-ring circus. But he has the audacity to be just so blunt. I gotta love it. Gotta hand it to him this week. The stock, however, some of the air's coming out of the balloon, so watch out. Okay, the Dow Jones Industrials made a new high. They looked like they were going to rally further. They've been in this sideways pattern for like 8 months. And so, the false breakout is kind of interesting. And one wonders here if we have seen the top here. It's possible we're still close to the highs, but there's a lot of reasons to think that the internals are falling apart. We're going to show you some of that. The NASDAQ 100 is about its support. It's still right at its highs, not too far below its highs. And all the big cap names are really the 5 or 6 big cap names are really what's carrying this market. There's nothing else going up really with it. Everything else is going sideways. S&P 500, look at that, just continues to chug higher and higher and higher and higher. And who knows when this thing is going to top. I tend to think it has, but I don't know. The small cap index, this is one we would look for to also, to start to fall apart when the market does. The fact that it hasn't, and it rallied on Friday when the market was soft, that tells me there's still some more speculative wind left in equities. I don't know. It's also possible that we have a news event this weekend or shortly thereafter, because what I'm reading is that all of a sudden there's lockdowns and things like that everywhere. So you never know what's going to happen here, and the market is extremely at risk of being toppled over by a surprise news item like that. Dow Jones Transportations, interestingly enough, are kind of starting to come down and weaken a little bit. These are really very economically sensitive, and so this is a very good indicator that the economy, I think, is starting to soften too. That had a little burst of steam, and it showed up in some of the retailers, but I think that burst is over. And we're starting to see retail sales are starting to be very iffy, and some companies that have been very strong are starting to look very weak. The US dollar is the most amazing surprise of the year, in my opinion. This year has been a theme of interest rates, the dollar, inflation, et cetera, et cetera. But the dollar has been incredibly strong. And when you print so many dollars, like the Federal Reserve has been doing, okay, they print dollars to then buy government bonds with, okay, and that's how we finance our deficits is with the Fed printing money. The U.S. dollar is an index. Okay, this is the US dollar index. So what this shows you is a strong dollar relative to the euro and the yen and some of the others that are in the dollar index. But the dollar purchasing power, which is what inflation is all about, well, we're starting to see almost, producer price index was up almost 10% year over year last month. So all of a sudden it's accelerating, and lo and behold, Jay Powell has thrown in the towel and said, "Hey, inflation's not transitory." Duh, Jay, duh. He's got a hell of a problem, because with inflation rising, the deficit exploding, okay, he can't keep rates low without causing more economic misallocation. And right now, when you have rates that are so low, it doesn't take a lot to invest in a project, because you have a low hurdle rate. Normally you want to have higher hurdle rates than that. 1% makes almost every project doable on some way, and it makes its way for a lot of waste. So the dollar here being strong is definitely a surprise, and I'll tell you some more surprises too. That one of the reasons that people cite for cryptos is that it's a hedge against the dollar. Well, lo and behold, we ran some correlation matrices, and it's not. Bitcoin and Ethereum are actually positively correlated with the dollar last year, and the other one's negative. So come up with another reason. It's just a password. Okay, this is the dollar. This will show you, weekly for 5 years. I mean, the dollar is really strong, as strong as it's been in a long time. And so, right now, even though the U.S. accounts for 28% of world GDP, 60% of market value, there's like a bubble in U.S. Names. The U.S. itself is in a bubble of bubbles. I don't know. 5-year Treasury yields are starting to continue their way up, and the yield curve is flattening. Now, the biggest surprise is this thing right here. The 10-year Treasury yield is at like 1.4%, with inflation running at 7% annually now. That just cannot last. That is not going to last. I don't know how long this is going to stay here, but I'll tell you this: when this thing finally leaves the Fed's control, and it's going to, I think it may already have, there's going to be some wild action that's just unanticipatable. And the best thing I can think for people to do is to kind of stand on the sidelines and just don't get in the way of it. The 30-year also, this just blows my mind. 1.8% with inflation running at 8 to 10%. I don't know what to say other than the fact that no one can be buying this other than the Fed, because who else would buy this? There's no value here. It's a guaranteed loss of 5% a year. Only the government would be that stupid, which is why we need to vote out all the incumbents and make America laugh again, because they have screwed everything up. They've pitted race against race, and they're messing up the economy and the financial markets as we speak. And I'm going to point this out everywhere I go. TIPS, which are Treasury inflation-protected securities. These actually anticipate inflation. These show investor expectations. It's kind of dipped a little bit, but we'll see. This thing may continue further. Now we're going to look at the cryptos, and the cryptos are really starting to lose it now. And we've talked about the fact that that they really don't have any real intrinsic value, and especially Bitcoin is nothing but a password. It's just an empty suit. Bitcoin Cash is making new lows. So this one has performed so badly that it's really pretty amazing. Ethereum also has made what looks like a double top or triple top, and it looks like it's dipped a little bit. It is stronger than the average crypto, and that's interesting, but it doesn't look like it's ready to run away. It's got a pretty full value, and it's got a lot of people in it. You really have to build a new investor base to have this thing rally further. Litecoin is another one that just looks like crap. Here it's closer to its lows and its highs. And this is like one of those altcoins. I really don't know what one does with this. I really don't. Ripple is also a token that facilitates international fund transfers, kind of like a SWIFT or a wiring system. And Ripple is also closer to its lows and its highs. Coinbase is the broker that handles the most amount of crypto sales, and it's also not looking very well since it came out, went public. It's actually closer now to its lows. As is Robinhood, which is absolutely getting trashed. It's down like 80% from its highs, and this one doesn't look like it has any life in it left at all. So, Overstock.com looked like it broke up and all of a sudden broke down. This one is highly correlated to Bitcoin. In the correlation matrices, Bitcoin actually was very highly correlated to Overstock.com, even though this is a retailer that accepts Bitcoin. That's really why it's correlated to it. But no one actually uses Bitcoin for e-commerce. So, they've said that 0.5% of their sales are in Bitcoin. So, la-di-da and to that. All right. MicroStrategy is a big holder of Bitcoin. I'm not sure what this company exactly does. I don't know what its strategy is other than holding Bitcoin, but it's kind of softening up a little bit. We'll see. And Grayscale Bitcoin Trust is sort of the first ETF. The Winklevoss brothers, who are famous for being opponents of Mark Zuckerberg in the Facebook trial, they claimed that they invented it. And they started the Grayscale Bitcoin Trust, which is kind of an ETF-like security, and this thing is breaking down. So this one is not performing well. This is suggesting that there's weakness around the edges. Riot Blockchain also looks like it's just breaking down possibly. Again, blockchain and cryptos are all in the same family of, you got to own them. They're the best thing since sliced bread. All right, now this is the Bitcoin ETF. Look at that. This thing's down 33% since it was funded. It was funded, had record inflows that day, and drove up the price of Bitcoin to all-time highs in Ethereum. But look at this. This thing is just softening and weakening by the day. This is a crypto trust, a crypto index fund of the top 10 called Bitwise. And look at that. It's down 80% from its highs. And this thing also is just sort of like in a sideways pattern, not looking like it's going too well. Now, if you look at the stocks that are the most important, we're down now to where the indexes are reflecting a few stocks only. Stocks like Apple, which is now at $3 trillion, or very close to it. And ever since they announced they were going to get into the robo-taxi business, the stock has jumped $500 billion. In other words, the marketplace has given them credit for half of Tesla's value that they're just gonna swoop up in their efforts in the market. Amazon also right near highs. This one could break up. It continues to look like it's positive, like something's positive about it. And this thing's very highly correlated to the market. I mean, when you look at these kinds of companies, these $1 trillion plus market caps, they are responsible for almost all the index moves. And you look at like smaller cap companies, they're contributing almost nothing. And a lot of them that have been high flyers, we're going to show you some, are down 75% at new lows, et cetera, et cetera, et cetera, not really performing well. Facebook is another one that's kind of broken this trend line. I don't want to get into it too much today. I know Mark Zuckerberg doesn't even deserve to be mentioned. And Google looks phenomenal. This is highly correlated to the S&P 500. All of these stocks are, and Google is amongst them. Microsoft, a huge market cap again. This one look at that. See, that's what I mean by the top of the mountain. How much better can it get than Microsoft looks like right now? And that's my point. is that the reason I'm sitting on Mount Everest is because there's only one way to go, and that's down, and it's cold up here, and there's no one up here. There's no greater fool to take the stock away from me. I'm always that greater fool, and the saying, a fool and his money are soon parted. Well, where's my wallet? Well, anyway, so Microsoft, is looking really good here. Nvidia is coming down to support. This is a semiconductor company. This one is approaching $1 trillion. This one is just an amazing, growth story right here. But this one is coming down to support. Be interesting to see if it continues to rise or not. It would be kind of like a Tesla in that it's very much speculative money that has driven this. Okay, Netflix also has broken up out of a sideways flag, but it's starting to come in, and that's one of the things we're seeing is that things are stocks are breaking out, and then they're not really following up. So that's one of the negative signals that we're seeing in the marketplace is that the positive breakouts are they just run out of gas and they all of a sudden collapse. The bank index and the financials are starting to get very weak. They were actually pulling the market up with them for a long, long period of time as rates were going up and the yield curve was steepening. And the bank index now looks like it's curling over. Another index which is interesting, which is to me a sign of inflation, is the REIT index. And this is a place maybe to be, is that because it's real estate oriented. This is very much a hard asset and very much probably a good hedge against inflation right here. CRB Commodities Index has kind of come in a little bit, but it looks like it may be continuing up. We'll have to see. A lot of the commodities we're going to show you right now have kind of come in a little bit because I think demand has slowed, but there's been a second wind to a lot of them. And for example, the Invesco Agriculture Fund, which looks at a lot of food type of inflation on the farm, and that has just been going crazy. Uh, for example, wheat, broke back down, but there's been a drought. This is weather related, but in general, almost all the foodstuffs at the wholesale level right here are going up, and they're going up at accelerating rates, and they're being passed on by companies like McDonald's and Coca-Cola, Procter and Gamble, consumer staple companies. They're all happy to see this because they can pass it on and they can still make a great margin. Livestock, again, there's been this is pigs and beef and things like that, closer to its highs than anything else. And with the sort of the vegan momentum of not eating meat, it's kind of interesting that this would be at its highs because I know a lot of people that have given up eating meat. So the airline index, which is kind of interesting because this thing has really broken down. A lot of the airlines are complaining about the mandatory masks, especially Southwest Airlines. A couple of them are saying that they're just absolutely stalling traffic, and I can see how. I don't want to go on an airplane. I don't want to get a colonoscopy from the TSA and then wear a mask and then battle with the damn stewardesses over whether I can have a drink or not on the plane. I think that would just be a horrible headache, and I can understand why they would want to lift that restriction because, after all, I don't know that that it does anybody any good. I mean, how many vaccines can you give people, and then masks and all that, and before it does any good? American Express is a credit card company, and so it tends to be really highly correlated to retail sales and the economy. And it's kind of gone sideways. It was actually pulling the market up with it. J.P. Morgan, largest bank, this one was going up too. It's now going sideways. And again, these are a function of the change of the yield curve and the fact that long rates are coming down while short rates are going up, and therefore there's a flattening. And that's also a reason that also tends to presage economic weakness, and little of the reason that we think that an economic collapse may not be too far off. MasterCard also has had a good growth period here, but it's kind of come in a little bit. It's correlated again, credit card company correlated again to retail sales and the consumer. As is Visa. Visa though has kind of come in a little bit, and Amazon has actually stopped using Visa for its purchases in Europe, or I think Britain, maybe Europe, because of their fees. And so this one, Visa now is getting compressed margins as a lender, and so it's a little bit harder for them to make money than it was. Berkshire Hathaway is like the Warren Buffett company. Put this in here because look at that pattern. It looks like it broke up. This is a beautiful financial company, and it's one of the top 10 market cap companies. It looks like it broke up, but who knows? It broke back down a little bit on Friday. But if this thing breaks up in positive, this is very bullish for the market. So that's why, while the market collapse looks like it's around the corner, you got to also keep in mind that there's still some dogs pulling the sled upward. Oops. Lumber, I haven't put this in a while, but this is, again, blows my mind. Lumber had an 800% increase year over year to like $1,600. Looked like it just collapsed in some kind of weird bubble or market shortage. It collapsed all the way back down, and now it's all the way back up to $1,100 again. So it's had another 500% increase in the last 3 months, and that is going to be a big reflection in housing prices, which it's going to affect. Like crude, now crude oil has kind of come in a little bit, but it really isn't good news. For one, there's a shortage now of natural gas in Europe that Russia has kind of engineered a little bit, and European futures, I don't have them here, but they're way up in trading in Europe. So light crude is not doing very well. Shale oil is not doing very well. The prices are down a little bit, but the supply is really tight. And when you look at the stocks, they're trading near their all-time highs. We're going to see higher crude oil prices, I do believe, and that is going to continue to filter throughout the economy. Gasoline kind of gone sideways here, but again, it should resume upside unless we have an economic slowdown that's really high. One of the reasons I think gasoline isn't higher is probably because there's an economic slowdown, and it's the price of it has gone through the roof. So copper miners, these are correlated to the economy. These should be a lot higher. These should be rallying if the economy was really strong. They were rallying a while earlier. They're also critical to the housing sector, the economy. So there's a little bit. It's kind of interesting. There's a price push that's going on that you can see. There's a demand pull down that you can see. All of this is hyperinflationary, stagflationary depression. Is really not good. I mean, the worst of all worlds is really upon us. Gold has behaved remarkably badly, but actually not bad considering the dollar index is up. Gold is actually in a very bullish pattern here, and it may just have another life in it. We'll have to see. Silver is right at support. It's actually breaking down. This is negatively correlated to the dollar like crazy. Silver has had a very bad period as the dollar's had a good period, and it's very much of a factor in solar panels and things like that. So there's industrial value to it, and there's also numismatic value to it, and there's precious metals value to it. Okay, now I want to show you some of these former high flyers. These are the ride sharing and delivery companies that basically take a hamburger from point A to point B and have these amazing market caps. Grubhub is one of the first to come out. Look at that, trading at 12-month lows. The delivery business, I don't know what is so exciting about it. I mean, you just basically drop people off, and if that's the case, why isn't Domino's worth a ton of money? They have their own delivery service for years and years and years and years. So I don't get it. But here's Lyft. Lyft was another company that had a huge market cap, and the air's coming out of the balloon. And we're just kind of showing you that this is happening to a lot of stocks. They've had their little runs up, and the air's coming out of their balloon, and they're slowly pulling the indexes down. Except the indexes are being held up by the real big mega cap companies. Uber, same thing, has been near 12-month lows. Walmart, retailer here, again, starting to break down a little bit, but these kind of firms have pulled the economy upward. FedEx Corp, positive break for the economy. It transports all goods. It's projecting higher earnings, and it's buying some of its stock back. This company has had some trouble executing, but it looks like it's doing it now. UPS also staying very strong. The economy, these will need to break down as the economy breaks down, because they will inevitably slow their revenues as economic activity slows. And then finally, big pharma, and with all the new talk about the flu, big pharma can't be any happier, because now we have to wear 6 masks and we have to have 3 jabs, 4 jabs, 10 boosters, who knows. But all I can say is there's nothing like a good flu for big pharma and all that. So with that, I want to say thanks a lot for tuning in. Be informed, be amused, never be misled. Please like and subscribe. And we're going to see you at the beginning of the year, next year, for our projections about what's going to happen in 2022. But there is going to be an economic collapse. We'll see you next show.